Hi everybody, my name is Mary Redmond and I'm talking right now about the EURCAD pair. And the reason I like this to the short side for the coming week is just basically because of the interest rate expectations from the two central banks. I think the statement from the Bank of Canada was a little bit more hawkish than expected, and you can also see that the EU inflation was a little bit lower than expected. So we may have a decrease in the expectations for interest rate hikes from the ECB, as well as an increase in the expectations for interest rate hikes from the Bank of Canada. So I think this is probably going to be a difficult trading week. I think it's probably going to be difficult for the US dollar pairs. The US dollar index looked like it made a break out of its upward channel, and it's kind of consolidating here. I think there's a lot of uncertainty. We had some weak housing numbers last week, and we're also going to have the US non-farm payrolls on Friday. Plus there's 4 additional central bank meetings next week, and I think you have the situation with the stock markets here, whereby we've had an incredible bull run in the markets, and I think a lot of fund managers are probably going to be doing window dressing and holding stocks for their portfolios. But I also think that the S&P is going to have to struggle to really break out to new highs. If you look at the chart of the S&P, you've got a very strong upward trending channel, and then you've kind of got a downward channel, and you have a wedge that's probably going to break by June. So I think it's probably going to break out to the downside, but probably not this week. So talking about the EURCAD, you can see on a daily chart, it does kind of look like it has a head and shoulders forming. It's below its weekly and monthly major moving averages, although it's above the daily moving averages. And you can actually see it looks kind of like a double head and shoulders here. And I'm thinking that if there were actually a break below any of these big moving averages, then it would definitely be in a downward trend. And we had a cross here on the twin RSIs that was earlier in the month, and it hasn't crossed to the upside yet. So I think there's a lot of indecision. But if you look at what the statement for the Bank of Canada said, it just sounds to me like they're a little bit more hawkish than expected. And of course they always say that they have to carefully consider additional actions because there are a lot of different factors to consider, including what's going on in the Eurozone and the strength of their own currency. But what they do, it just looks to me, it says that the extent that the expansion continues and the current material excess supply in the economy is gradually absorbed, some of the considerable monetary policy stimulus currently in place will eventually be withdrawn, and the possibility of greater momentum in household borrowing and spending in Canada represents an upside risk to inflation. And they talk about continuing high energy prices, which over the long run comes from the increasing demand from the so-called industrialization in the emerging market economies, and just a limited supply of oil in the world. So that's nothing new. But Canada's central bank puts inflation as their primary, controlling inflation as their primary goal. It says it right on their website. They try to keep inflation low and stable. And that's in contrast to the U.S. Fed, which makes maintaining employment and inflation their primary mandate. So the Bank of Canada, in my opinion, was just a little bit more hawkish than I had anticipated. I think some people might have anticipated, and you can see that the US CAD sold off. It broke out of this upward trending channel. And of course this pair really isn't very volatile, so it might just stay in a 100 pip range for another month. But in terms of the EURCAD, the euro made a pretty big move up over the last week against a lot of other currencies, the euro US dollar for example. And I think that move to the upside may be tempered perhaps by the slightly lower than expected CPI estimates, which puts less pressure on the ECB to raise rates. And of course, you've got this continuing ongoing saga about how much money Greece is going to need. And most people can, you could probably take it as an assumption that they're going to get an additional bailout, and if they're going to default, it may already be priced into the market at this point. So it doesn't seem to be affecting international credit spreads or the LIBOR spreads. You can tell because the volatility index, the VIX, usually spikes up when LIBOR spreads spike up. And it also hasn't really spread to the surrounding economies, Germany or France or any of the bigger economies as of yet. But it's something that's going to continue to put downward pressure on the euro for a period of time, and that's why I think that the EURCAD may have rallied a little bit too much, and I think it's a better downside move for this week. And if you zero in on a close-up chart, it made this big downward after the rate announcement, and it's kind of hard to short right into these things, but a pull up to the 39.50 level I think might be a good short for the coming week. And as I said, I think you might even be able to see a break below. Its 50-day moving average here comes in at 38.3, so that's 100 pips below. But if it starts to drop below these major daily moving averages, I think that you could consider that the trend had gone from a consolidation to a possible downward trend. So that's the pair that I do like for this week.